Hey, listeners, welcome back to the ValueHunt podcast. And today I'm really happy to be here with my friend Jeffrey Ong from Singapore. And he works at Azimuth Capital Management. And yeah, I think we'll have an interesting discussion about the stock market and Singapore in general. So make sure to take some notes. And yeah, Jeff, why don't you say a couple of words before we jump into the questions?
Hi, David. Hi, nice to meet you again. I'm Jeffrey. I'm working as a fund manager for Azimuth Investment Management. So, enjoying investing in stocks and real estate as well. So, anything that's to do with investments, pretty much enjoy it. Yeah.
Perfect. Yeah. Probably we can dive a little bit into the real estate too, because I guess I haven't had anyone talk about real estate so far. So it'd be a unique opportunity to capture some insights from from that industry. But first of all, I would like to know how you define yourself. Obviously, you just gave us a brief introduction, but broadly, like what you like to do and what's your style of investing.
Okay. Yeah, I pretty much went through the Chartered Financial Analyst program. That was like donkey years ago, 16 to 20 years ago. So we went through value investing. So we learned about discounted cash flows, um, price earnings ratio, and price to book, and all that. I think so. From there, I took a chartered alternative investment analyst (CAIA). That also helps me to price options, volatility. So my style started out as deep value investing, looking at discounted cash flows and stuff like that. And then I evolved around 2009 to more technical analysis as well to overlay it. Right now, I would say that most of my style, 70% is deep value, to analyze the business. First of all, do I understand the business? And then if I understand how they make money, do I know the risk? And then after that, when it qualifies as a quality company, then I will look at the charts, technicals to know whether it's a good time to buy. Yeah, that's how I evolved over time.
Interesting, interesting. And
Yep.
um, I would say there's somewhat of a negative connotation to technical analysis and all of that. So, why don't you explain to us what you are actually looking for and why do you feel that's useful to your investments?
Um, okay, there are a lot of influencers out there, and some of them are pretty good. So I noticed that those guys that are into deep value fundamental analysis, they tend to do very well. I do agree. But I think technical analysis plays a part as to when you enter and when you finally exit. So I give you an example.
Yeah,
For
sure.
example, yeah, like Alphabet, Google, right? Alphabet recently had a news on their chip that could do massive improvements and escalation of the way they calculate things. Now that caused a gap up of Alphabet last night. There were a couple of weeks ago, it was actually down. It was hovering sideways. And then if you calculate the intrinsic value, Alphabet was actually at a slight discount, trading at a discount. Now, if the stars align and is trading below the intrinsic value when you calculate the discounted cash flow, and then you buy it when it's at the support levels. So, for example, if it's below the 200-day moving average, you kind of know that the sentiment is down, and then you start accumulating, and then you wait for the bounce up. So that could enhance your return a little bit because it's a play on sentiment, right, David? Because when you buy, you try to wait for the sentiments when the sentiment is down. Yeah, you don't buy when there's euphoria. So that's the trick. I guess most of it is still on fundamentals that is important, but I think technicals just helps you a little bit more.
Mm, interesting. Got it. And do you feel like do you need do you need extensive like technical analysis knowledge to kind of figure out if the sentiment is bad or not? I'm asking because maybe a year ago or so I was looking at PayPal and I just saw like massive negative sentiment. You can just go seeking alpha Twitter or whatever and see that people were talking really badly about them. And I guess that's kind of an alternative data point that you can use to figure out the sentiment. So I was wondering if you just focus on the actual technicals, or you also kind of look for other data on the web.
I feel that, um, okay, for example, PayPal, uh, if you look at technicals, purely on technicals, and then you see that it keeps going down. Just give you an example. If the 200 days moving average, no matter how bullish the fundamentals is, how much you like PayPal, and you calculate and it's worth more than what it's trading at. Now, if the 200-day moving average is going down and the price keeps breaking below the 200-day moving average, then it's an alarm bell on that tells me something is wrong. Something is not in the information that you calculate. Now, if I'm very convicted on PayPal, for example, I would not cut loss, but I will stop buying. I'll stop buying, and then I will re-examine my thesis. Is there something that I overlook? Because the sentiment is bad, it could drop a lot more. So
Mm-hmm.
technicals usually will stop me from accumulating on the way down because you run out of money, and then there's no, you could technically go to bust there. So sometimes the market knows something that you don't. But I don't use technicals to cut loss because I'm not a trader. I'm a long-term investor. It just tells me to stop
Mm-hmm.
accumulating and then re-examine. It's a handbrake for me. Yeah.
Mm. Got it. Got it.
Yes.
Interesting. And in the last couple of months, you sent me a couple of accounts you were managing and how you turned them around and so on. So I'm curious to know, like, what's your kind of day to day job or in managing capital for Azimuth, and yeah, how do you kind of approach turning around the portfolio that's badly constructed or
Yeah.
that hasn't achieved the targeted returns.
Yeah, that's a very good question. So I'm glad that I put you on my distribution list because then we get to know each other. I like to read what you write. In fact, I watch your YouTube videos and then I keep you in my list so that you know what I'm thinking as well. So
Yeah.
that's good. So in wealth management, I serve mainly high net worth clients. I think pretty much in Asia, it's still pretty much relationship driven. So a lot of high net worth clients, they go with a advisor that is good at marketing at the bank,
Hmm.
and then the products that they sell may not be aligned with the clients. So a lot of the portfolios that I see is those clients, I've known them for a couple of years, but they are served by other advisors. So it took a long time for them to trust me. And finally, when they show me their portfolios, then I will have, you'll be like, oh my God, you have 50% of your portfolio into Chinese stocks. So here's one thing about technicals, David. If you look at Alibaba, you look at Tencent, fundamentals are fantastic. P ratios are close to single digits, but there's something wrong with it because of government issues, political issues, and the technicals do show a part. So it saved me, and I stopped buying Chinese stocks back in 2022. In fact, I cut my weighting down. So that was number one. One of the biggest issue that the clients have, because in Asia you tend to buy a lot of Asian stocks, and if you are
Hmm.
Chinese living in Singapore, you tend to buy more Chinese stocks listed in Hong Kong or
Yeah.
China. So there it caused a lot of damage. So what I do is that, hey, wait, let's try not to be gung ho. Let's look at the MSCI World. You do want capital gains, and MSCI World, the US stock market is about 72%, and Europe is 15, and then China is only about 8. So what I did was to slowly cut down the Chinese stocks by 10% a month. Why 10%? Okay, some people cut entire portfolio, right? 60% down to 20 immediately. I try not to do that. Number one is painful. Number two, what happens if you cut it and the Chinese stock rebounded? You never know. It's cheap. And a lot of them have good fundamentals. I do use their apps, like Alipay. When I go to China, I use that to pay for my subway and all that. When I take tube station, buy food, and it's an incredible app, but it's just not going up at that time. So I had to cut it by 10% a month. So there is less painful, minor surgical incisions. The second problem a lot of clients had was their portfolios were over leveraged. So in Asia, because you're high net worth, it's just like, I don't know whether you have an interactive broker account. They allow you to have margins. And even if you put $100,000, you can leverage up to 200. So when it goes up, it goes up. It goes down, you can really lose a lot of money. So I saw that a lot of clients were leveraged. They have $5 million and then they buy up to 10 million. So I said, wow,
Wow.
it's a lot of it's a lot of leverage because the private bank gives them a lot of cheap credit, man. They borrow, and the worst thing is they borrow in Swiss franc. And because Swiss
Wow.
franc interest rates were so low. Now the problem was that Swiss franc appreciated against US dollar and against the Hong Kong dollar when most of their stocks. So now they not only do they have a lot of China stocks that cause the price to go down, the Swiss franc strengthened against it and the liability was stronger and the asset was coming down. So I told them we have to cut Swiss franc gradually over 1 year. It was very painful. Right about July, August, after about 4 months of surgery, minus a couple of surgeries, it tends to be cleaner. We deleveraged and then we cut down the Chinese stocks. We buy quality companies in the US and some European stocks. And then we kind of resemble the MSCI world and then it starts to turn around. Yeah. So that's how I did it. Yeah.
Interesting. Yeah,
Yep.
I feel like that's a very kind of unique way to approach things because I would say most fund managers just stick to managing a pool of capital and they stick to their strategy and stuff. But there must be kind of a gap in the market for those people that really have some money to invest but don't know what they are doing, so they have to hand their portfolios to someone else. And I
Yes.
think that's interesting. Yeah, so I do know that in your newsletters that you send out in your email, you kind of talk a bit more about politics and macro events. And this I always tell you like this is really interesting, but don't really look at this because I don't feel like can
Yeah.
get any signal from that. And maybe it's just me, but I would like to know what signal can you sense from these macro events, and how do you kind of adapt your strategy according to that, or you just like to look at those macro events to get a better feeling of the market and so on?
The first of all, the macro events are just for entertainment purpose, to be honest with you, right? Because it it really is. I agree with you 100%. Yeah, it's reading tea leaves and guessing where the Fed will go. It's usually it's not very useful. But
Mhm.
there are some statistical truths in, like for example, when the Federal Reserve is on a rate cutting cycle, and that could last 2 to 3 years, like right now, it was about 5.5 fish, and then it's coming down, right? Couple of cuts, December, maybe one more cut. Now, during this phase, the S&P 500 does outperform. Now, the average is 10%. It will do about 13 to 14% per year. But when there's a rate hike cycle, like for example, beginning of 2022,
Yeah.
okay, that is where the S&P underperformed. There is some truth in it. Now, even if you buy quality stocks during that phase, let's say the at the start of 2022, you can still buy, but you got to be very selective and maybe tighten your rules. In my last email that say that, hey, I think the general stock market is very expensive. So what I will do is that I will not buy anything that is uh, at fair value. Instead, I'll buy something only when it's 10% or 20% below my intrinsic value. And I will
Mhm.
tighten my requirements to buy stuff because I know that the market is now against the wind. So right now, like beginning of 2023 was when the stock market was rallying because the Federal Reserve indicated that inflation is at its peak. Then I know that the wind is beginning to blow in our favor. And then I would maybe even buy stocks that are at fair value, but not too expensive.
Mhm.
And so it depends. Do you have a watch list of quality companies, maybe 50 companies? There are times where you're tighter in your selection and times where you're loser. Like right now, a lot of stocks are really overvalued in Nasdaq. For example, Palantir. I don't know how to value it anymore, but it's still going up. So what I did was to reduce my position by half. Um, because it's factoring in like 40% growth per year for the next 5 to 10 years, which is we know is most likely not possible. So what I do is that I reduce by half. It can still go up 10 times, but I'm just going to reduce my risk. So macros do play a small part, just like technical analysis. It's only 10 to 20% of what I do. Most of the decision making is from buying the businesses. So we are quite aligned actually. Yeah.
Interested, interesting,
Yeah.
interesting.
Mm.
Yeah, and I'm curious to know also what is kind of your time frame when investing into stocks. When you are buying it, like how many years out do you try to figure out their earnings, and what how does that compare to reality? So, what's your kind of turnover ratio, or how often do you kind of turn over your portfolio and so on?
Um, I realized one lesson: the less you trade, the better it is. Now,
Hmm.
for my fund itself, we are talking about the fund, and not the discretionary individual portfolio. The fund itself, I tend to try to hold on to them as long as possible. Uh, Once I find a business, like for example, I helped Palantir for close to 3 years in a fund right from the beginning.
Hmm.
I I only did one thing to sell by half. But when there are subscriptions to the funds as new money, I just kept the allocation about the same. It was about 3 to 4% of my portfolio. So I just add little every time I have new money into the fund. So I don't do large operations. I think the bulk of the profit, right, David, is made by not doing anything, by
Hmm.
doing your homework, liking the business, understanding it, buying it at correct prices. You can stagger your investments into 4 tranches or 5 tranches, buying it slowly. Then do nothing, and then just
Hmm.
keep following the quarterly results and see that they are on track, and the management is guiding the same way. So if I do any form of trading, it's more for options. Like I sell puts on companies that I really like, but it's too high just to earn income.
Hmm.
And when for example, if Palantir is too high, I will sell call options to sell to earn a premium while the price to wait for the price to go up. And I'm happy to let go. So
Hmm.
lastly, I want to tell you that a lot of my thinking has changed. So let's say technical analysis is just to help me to get in and eventually get out. But I view investing as putting your money with fund managers. The CEO of uh, Alphabet is my fund manager. The CEO of Meta is
Hmm.
my fund manager. The CEO of LVMH is my fund manager. I put money with them and then they just work with my capital and they generate cash flow to help me grow. So I don't change my fund manager. So I hope my clients don't change me as well. That's how I think. Yeah.
Yeah, I think that's a great way to put it. And I guess, yeah, you're just entrusting your capital to an entrepreneur, and he will do the best he can with it. I hopefully.
Yes.
Um, so yeah, and as you were speaking, I was kind of thinking about this conversation I had yesterday with Francois Rochon,
Yes.
and I asked him like. Why do most fund managers fail at achieving outstanding returns? And he was talking about um, kind of having the pressure from clients and all of that. So I'm curious to know, in which ways does the pressure, or let's say dealing with clients, affect your investment style, and how do you deal with clients in general?
Okay. Fortunately or unfortunately, my fund is daily dealing. There's no lockup. I'm not able to
Hmm.
when I first started. So the challenge was to perform immediately. And so I'm going to tell you that I started the fund in 2022 October. So that was one of the worst points in the stock market, you know. So I I knew that a lot of portfolios were damaged. I just joined
Mhm.
Azimuth at the time, and a lot of sentiments among the high net worth clients were very negative because that was the first time since the 1980s that bonds were down and stocks were down. It was
Mm.
so difficult because interest rates went up and then the economy slowed down because there was inflation, there was talk about stagflation. So the thing I
Yeah.
told myself was to survive, survive, survive. I need to do well. So I tell you a little joke, yeah. When I
Yeah.
started the fund for the first 3 months, nobody invested in my fund. And Vontobel was kind of like the prime broker. They said, "Hey, do you want to continue with this fund because there's no subscription?" I went to
Mhm.
the Fountain of Wealth in Suntec Tower. You can Google Fountain of Wealth. I was in desperation. I walked 3 rounds. I said, "Just save me." You're supposed to walk 3 rounds with your hands out in the fountain and the water will flow
Yeah.
down. I've got a $4 million subscription after that, US dollars. So,
Wow.
um, yeah. So come to Singapore and try the fountain. Yeah, I'll bring you back.
Yeah, I guess that's something I must do.
Yeah, yeah.
um, cool.
Please do. Then, okay. So I told myself I have to be pragmatic. I can't buy a stock that it needs to go up. I need to save my career. So I look at technicals very clearly. It must be near the bottom, but first of all, it must be a quality stock. Okay, so I think I remember the first stock that I put in my portfolio was Nvidia, Palantir, and then the Mega 7. I was so lucky, man. I bought the tech stocks because at that time they were so unloved. Interest rate was so high. The only sector that was going up was oil and gas. Okay, if you check
Mhm.
2022, it was oil and gas. So I told myself, the 7 tech stocks were down. If I use DCF calculation, every single one of them were discounted by 10% to 30% below the intrinsic value. I guess I was very lucky. So I said, okay, just buy 7 stocks, each one about 5 to 7% of the portfolio. And then the rest of it, I will have to lay down with some other uh, consumer stocks as well. So, um, and so I went with US market because it wasn't a time to be gung ho, yeah. And because my mandate was global stocks, and the first thing they look at is MSCI World. They will compare me against the benchmark. So I can't be down when the MSCI World is up. So to play defense, I had to do 75% US stocks, 15% Europe. I just stuck to the formula, but the stock picking was entirely on my own. I didn't follow the benchmark. I did look at what was the top 10 allocation within MSCI World. I did look at the quality, but if they don't fall into what I think is a good company, I will not buy it. So there you go. So I had a bit of luck on my side, and I followed the US allocation mostly, but a little bit of Europe. Then I did look at the technicals. I look at the MACD, the weekly chart, whether they're turning up. And I realized that they were really turning up at the time. So I just add on. And I raised funds and I add on to these 7 stocks at the beginning of 2023. Yeah, so that was my point. So that was how I saved myself and helped the clients as well. And save the clients, of
Interesting.
course. Yeah.
Yeah, yeah, yeah. That's really interesting. I guess it's a different game to manage outside capital than it is to invest for your own capital. Let's say.
It's true.
Yeah. So we were talking about like moments of adversity, and I think it's really interesting to figure out what were the biggest adversities of someone, especially someone like you that has had a long career in investing. So I'm curious to know if you could share any other points in time where you had to deal with adversity, and how did you learn from those situations, and just probably share some of those.
So before this career, I was actually a private banker
Mhm,
between 2013 to 2021. So that means I served the high net worth clients, who's who on the list.
mhm,
Some of them are billionaires. A lot of them are worth over 100 mil, 10 mil. The thing is that the first generation wealthy people, right? They made their wealth through hard work, their own business,
mhm,
and they tend to be very um, confident of their capability. So it translates into the stock market, which may or may not be true. So my role at that time during 2013 to 2021 is to assure to give advice. At that time, I was merely giving advice. I wasn't a fund manager. So I was giving them advice. It's challenging. Yeah. The most challenging part is to give them your recommendation, and then they may have an opinion to reject what you say or to accept it. So half the time they'll reject it, half the time they'll accept it. And then they will review the portfolio, say every quarter, and you are responsible for everything, whether it went up or down or whether they chose it or not. That was one of the
mhm,
biggest challenge at the start. And I knew there was a problem with the wealth management industry. I think in Europe, the good thing is that, like, for example, in UK, a lot of high net worth clients, my relatives, they put money with fund managers, like, for example, Terry Smith or Fund Smith, or they give
yeah.
it to the St. James and then they let it run for 3 years and not do anything. It works out better. So statistics have shown, empirical evidence has shown that it's better for most clients not to allow the advisor to sorry.
No worries.
Statistics have shown that it's better for the clients, high net worth clients, to let the fund manager run it. So the advisor's job is not ideally should not be telling you what products to buy. It should be taking your mandate and then investing it and giving it to good fund managers to run it. And maybe a
Mm,
certain portion, maybe 10-20% is play money for the clients to trade on their own if they want to. So generally, the ones that have been placed out to fund managers tend to do well, to do better. So there are studies done. The majority of the retail clients actually lost money when they invested with Peter Lynch. And Peter Lynch was one of the greatest fund manager. I think for 11 years, he did about 29% a year and retired from Fidelity in 1995. Even though he did 29% per year, most of the retail investors, half of them lost money. The other half
mm,
made 10%. Why? Because they buy at the top. They trade the fund, they buy at the top, and then they sell at the bottom. So I would say the biggest challenge is to persuade clients to trust the managers to do their job, to get a discretionary mandate to run for the client, which is not very easy for first generation wealthy people. The second generation are easier. They believe in professional management, but there are different sets of challenges. Yeah, the young people, they also want to be a fund manager, so they think everyone thinks that they're Warren Buffett, and then they want, yeah, so they want to prove their parents that they are good. That is another
Yeah.
problem with the second gen. So they will put some money with you, and then they ask 100 questions because they want to learn from you, and they try to copy your style of managing money.
Mhm.
Um, I would say both sides they have their big challenges. So yeah, I'm at a state where I'm happy, where I get to manage money. I try to cut down the advisory to very little, but we'll see how it goes. I'm looking for good managers, good partners to join me as well, join my team. Yeah.
Interesting. That's good. And I'm curious to know how do you manage teamwork, because investing is kind of a single player game, right? So you have to take decisions for yourself and kind of um, really take the setbacks and be responsible for your own decisions, right? So I'm curious to know how you manage and how does it differ between investing alone by yourself or having a team behind you, and yeah, how do you manage that?
You mean a team of analysts, team of
Yeah,
bankers behind me?
yeah,
Or
just like I don't know how your team is composed, but I guess you have some analysts, you have some, yeah, bankers or something. So yeah, how you manage the team behind you?
um, how it's set up is that most independent advisory companies, external asset managers, that's Azimuth, right? We can't, let's say you hire a banker, so their job, they're probably ex-private bankers, they used to handle high net worth clients. And if they join you, they are not on the salary basis. So if they're not on a salary
Okay.
basis, their full commission is profit share, they are actually self-employed. So we cannot force them to say, hey, you must stick to Jeffrey or David's view. And then when you advise, they will have their own opinions and they are pretty experienced. They're in their 40s, 50s. So if they have survived so long, they will have their own opinions. Yeah. They must have done pretty well for their clients. So I generally believe in soft power. That means you can't force it down their throat, but you can organize lunches for them, lunch in, make a presentation, educate them how to pick stocks, how to look at a fund manager, whether it's good. And you don't just look at the hindsight, you got to look at the style, how they pick stocks, how they pick businesses, look at some hedge funds that are trading forex, how does it work. So you got to win their trust, and it's a lot of soft power. Yeah. For analysts, oh, I love people who are opinionated. I really love opinionated people. Okay. I'm very westernized in the way I think. Obedience is important in the sense that uh, you ultimately somebody has to make the call, and if my name is on it on the line, I have to make the decision, right? But
Yeah.
in the meantime, I really welcome people with ideas. Obedience in the
Uh-huh.
sense of teamwork is important, and being positive. Of course, you can voice your opinions, you can disagree, but everything has to be positive, right, and constructive. Then it works.
Mm,
Um, I,
interesting.
I don't like to have a meeting where everybody keeps quiet and wait for me to speak. That's totally not my style. Yeah,
Mm.
yeah.
Cool. And usually, like for anyone that might be interested in in joining this industry, and maybe that's watching this and wants to kind of get a job, What is it that you are kind of looking for when hiring an analyst? And probably could you also guide us through how important formal education is in your decision process, or yeah, how do you think about hiring?
Okay. Um, I think it is not necessary to have a finance degree. I
Mm,
find that attitude is very important. Like for example, yourself. I find that engineers make potentially can pivot to be very good investors
mm,
because of the way they
yeah,
think, very
yeah,
mathematical. I've also seen people in fine arts, if they are able to pivot and they are determined, they can do it. Okay, having a CFA and a CAIA or finance degree helps. It helps you in the sense that you know how to do a DCF, you know what is a PE. However, it can also be a hindrance depending on your outlook in life, because the worst thing is to graduate in a top school in finance and think that you know it all, and then you
mm,
say that it has to be this way. I think in life, right, whatever degree you come up with, if you're very determined, you know why you're doing this, and you really got
yeah,
a passion for it, and then you have an open mind. Yes, I came from the top school and I have finance, but I'm willing to learn. I'm willing to dismantle what I learned and disprove, to relearn new skills, because what I learned may not be applicable in real life. And if you have this attitude, yes, you can make it. So I'm looking for people who are flexible, not in morals, but flexibility in the way they think, very positive attitude, and they like to reach out to people who are successful. So they are keen learners, like a empty shell, empty
mm,
vessel that's able to take in knowledge. These are the best people to work with. I'm like an empty vessel, you know. If you know me well, I get excited when
mhm,
people share new ideas. And some
yeah,
people say that I get too excited, you're too influenced. And then after
mhm,
2 or 3 days, I'll calm down, Jeff. Let's test the idea out. Really, is it true? Is it true? I need to, because I get excited too easily. I'm a very open person to learn
mm.
stuff. Yeah, these are the type of people that will do well in the team. Yeah.
Sure. Yeah, I think those are great qualities, and to that point, I guess you also have to have a high degree of humility to kind of be able to learn and yeah, be willing to be open minded. So, do you think humility can be taught, and how can we stay humble and make sure we stay open minded, so we can learn new things and adapt to the new circumstances?
Wow, humility can be learned. Um, a lot of it's upbringing, right?
Yeah.
A little bit is genetic upbringing, how your circumstances were, and I think it's also what you face in life at certain points. I find that people who have too smooth a life right from the beginning, they went to the right school, came from the right family with the right connections, uh, they don't really have that determination to change. They may not be the most suitable people to be open and, you know, to learn. I think people who went through setbacks early on in life, they may not have the most perfect degree, the most perfect university. They may not be come from the richest family with the right connections. Maybe they have it harder in life at the start. They tend to be more humble, and they tend to make the, in my point of view, one of the best teammates, because they're hungry and they're humble. And they know that if they're stubborn, they got hit before, they have failed, they have setbacks, so they better learn. I think this is one factor that helps them to stay humble as well. Yeah.
Mm. Yeah, I think that's a great one. I feel that's quite accurate, and um, I don't know how familiar you are with Brazil and some of their financial industry history, but there was this really big investment bank run by the guys at 3G Capital that own Burger King and so on. And yeah, they really had three rules for hiring. People, the hirees would have to be poor, hungry, and humble. And so that would make up a good combination for an investment banker. And they did really well by doing that.
Mm.
Um, yeah, so I feel like that really aligns with that philosophy. And one other question I have for you, probably switching a bit topics. You obviously are based in Singapore, and I guess all the people that are avid students of Charlie Munger and Warren Buffett have heard of Singapore and the success story of turning around a country, basically. So could you give us your take on how real that success story really is, and um, how is, for example, Lee Kuan Yew viewed by the Singaporeans?
Yeah. I think we are a miracle. We all know that. We got our independence in the, World War II. We were a British colony since 1890 by Sir Stamford Raffles. Um, and then in World War II, 1942, we were occupied by Japan, and there were a lot of atrocities that were done. So 1945, we were the World War II ended. We went back to the colony of being the colony of UK, but things have changed since then. We realized that we cannot rely on our colonial powers to defend us anymore. And look what happened. And so there was a huge movement in Southeast Asia to gain independence from their colonial masters. So I think 1959, we got our independence, but we joined Malaya. Malaya Federation was a much bigger country. And I think Lee Kuan Yew had a vision that it should not be racially, the leaders should be based on merits and not preordained that a certain race or religion to continue to lead the country. Now, we got kicked out in 1965 of Malaya, and very few people gave us a chance to succeed. And we all knew that, my parents' generation, they were so fearful. They, what are we going to do? We don't have water. We are only 720 square kilometers. I think it's even smaller than London, if I'm not wrong, the size of Greater London. And it was scary. I wasn't born then. But I think Lee Kuan Yew had the rare, what do you call that? A rare quality of having the discipline, the grit, and to persist with his vision, not give up. And then because he was educated in the UK, he also understood Western democracy and very conversant in English and Malay, the various ethnic minorities languages, Chinese, which is predominantly the 70% of the population. So he galvanized the population and said, look, we got to unite. We don't have water. We're going to get an agreement from Malaysia to get water and treat our water. We don't have food. We're going to import it. We're going to make friends with all the countries. We're going to defend ourselves. We're going to spend a lot of money in defense. And all the boys, they are 18 to 21, has to serve national service conscript. So we do not look for wars, but we will defend ourselves. And we did so well. We rely on trade. We scrub out corruption. Corruption was very rife in 1965. Very quickly, the People's Action Party wiped out corruption. Is jailable. People go to jail for that. Civil servants were very well paid. They were paid as well as the market rate to work in the private sector. So they attracted the best brains. And I think number one, what he did right was he attracted the best talents to join the civil service to make the best policies. Number two, he chose English because we are a small country. We cannot use other languages. We have to assimilate with the world, and English is the lingua franca.
Mhm.
And number three, he wiped out corruption, and through meritocracy, the country grew, and that we all were very proud of him. And when he passed away in 2015, is it that the whole country mourned. He was like a founding father of the country.
Mm. Yeah, that's a really fascinating story.
Yeah.
Obviously, I think it helped also that you were such a small country, because that would have been really hard to do in a bigger country. But still, it's so interesting. And I guess it's a showcase of what can be done in other places, and it serves as inspiration for a lot of politicians too. I feel like, and it's hard to find good examples of politics in the last a century or so. So it's nice to see that happen. And in terms of actually living in Singapore, would you recommend that to young people? I do know that a lot of um, say graduates from Europe actually go into Hong Kong or Singapore to work at investment banks or work as an analyst. So how would you recommend Singapore to young people?
Oh yes. Do come to Singapore to work because it's the financial center of Asia. I think it's either Hong Kong or Singapore. I would prefer that. Of course, my recommendation is Singapore. But I've been to Hong Kong. I mean, it's great for expats. If you're single, the party scene is better. Singapore is better for families. In the sense that it's stable, and there are a lot of places for children to grow up as well. But both countries are great. Both cities are great. Singapore, I think, is more westernized.
Mm,
Simply because English is more widely spoken than in Hong Kong. So I think most of the hedge funds, fund managers, investment banks are based in Singapore. It used to be in Hong Kong because the Chinese companies, mega capital companies, are doing a lot of M&As, and it used to be a very vibrant scene. Not anymore. Uh, I don't know whether you'll come back again, but in Singapore is where the action is. Um, and the pace of working is pretty fast. It's like New York, to be honest.
mhm,
So if you're young and you have energy and you have ambition, Singapore is a place because it's either Singapore or New York. You can cut it in New York, you can go anywhere. Similarly, in Singapore, you can make it here. It's very stressful, very high energy. People are friendly, very friendly, and if you can make it here, you will probably make it in many other places.
mm.
So it's a good
I
place.
think that's really interesting.
Yeah.
Yeah, just to wrap up, I have two questions,
Hmm.
and the first one is actually quite interesting, because a lot of people have been asking me on Twitter, "Oh, how do you get those guests? How do you get to speak to such interesting people?" And I really have a theory, but I really don't know why I get to talk with with people like you. So I would like to ask you, why did you firstly accept to kind of do this interview, and what took out to you that really made you be willing to talk?
Or yeah, I think the story I shared with you, right? I mistook you for compounding quality. So
Hmm. Oh
I
yeah.
saw your YouTube. So what you're doing right is YouTube, definitely.
Yeah.
And I subscribe to Compounding Quality. And his name is Peter Siegel or something, right? And I like what he wrote, so I tried to look out for him, and then I mistook you for him, so I reached out to you.
Yeah.
Right?
I
Remember?
had
And then we
forgot.
talked on LinkedIn. We talked on
Yeah,
LinkedIn
yeah.
for a while, and then you say you wish you were him, but you're not. And then it helps, right? You're friendly. I'm easygoing kind of guy, to be honest. I talk to anyone who's interesting, yeah.
Uh-huh.
So we 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 went on from there, right?
Yeah.
I don't know
Yeah, it
how
was
you reach.
actually super fun.
Yeah, yeah. So we kept in touch. I hold no s. I mean, like you you sound like you know what you're doing. You're confident. You love to invest. We got something in common. Hey, let's talk. So I don't know how you reach out to the rest, but I'm impressed as well. Why don't you share with us? How do you reach out to everyone else? I mean, I'm different. Everyone's different.
Oh yeah, I really guess it's just also it helps that I'm young. I feel like that helps a lot because people are more open to share their wisdom with young people because
Yep.
obviously they were young once and they have kind of this abundance mindset, and I think that helps. But I really don't know, to be honest. I guess. Um, I guess it's also that I'm doing this for like 2 years or so. So people kind of see that I'm serious and passionate about it, and it's just not just like a one-time thing that I just want to talk for the sake of talking. And so I guess that helps. But to be honest, every time someone agrees to talk with me, I get a bit surprised because there's very little that I can give back. So I would say it's just pure generosity and yeah, the joy of talking about their passion. And so I feel like that's part of the answer. But as you may understand, I don't fully know the answer, so that's why I feel like I'm going to ask a bit more this question in my interviews, just to also kind of fine tune the way I can approach people. And I guess it's always kind of an art to do cold outreach, because why would people want to talk to you in the first place, right?
Mhm.
So I think yeah, it's quite interesting. So
Yeah.
um,
You may have a LinkedIn, right? You
that's
reach out to them from LinkedIn, and then you have YouTube, right?
yeah,
That helps
yeah,
the
yeah, yeah,
profile.
exactly.
Yeah.
I feel like it was a lot harder when I started. So now you start building a portfolio of high quality conversations, and from the start, I think I was always focused on providing as much value as I could for my audience, and really didn't want to take anything back, because I felt like it was already a really nice payment to be able to talk with these people. So, and people like you. So, yeah, I like what I'm doing, and I guess I'll keep going.
Absolutely. You're doing a good job. Yeah.
Nice. And the last question I have for you, just to really wrap up, is what advice do you have for me, and more in general, like young people? But since you already know me quite a bit, yeah, what advice do you have?
What in Korea? in what?
Just whatever you want to to give advice on. I think I just asked this because everyone gives like a different piece of advice, and it's always based on their own experience and what they think it's most valuable in life. So yeah, just generally, what advice would you give?
Okay. If I look back at my younger self, right, and I wish the best for you, is that I would look out for role models, people that you like and you want to be in 5 years' time, 10 years' time, and you look at them and you say, this guy is great. I want to invest like him. I want to have a family like him. I want to have his lifestyle and his admired, and try to reach out to them. And, you visualize, if you have a vision board, uh, put up pictures of what you think your health will be, your family, your relationships, how you invest, your wealth, abundance, and then visualize it. And for some reason, when you keep doing that, these people will gravitate towards you. And then you surround yourself with people, they're always guiding you. Even for myself now, I have I'm blessed to have mentors still. They're guiding me. Some of them are older, some of them are younger, but it's fine. Even though they are younger, they know things better. And some of them they're good in their own ways. Maybe some are good in motivational speaking. Some are good in health. Some are very good in investments, definitely much better than me. And I learn from them. So this is what I would do when I was, if I were to be your age again. Um, Spend that time to look out for such people, and it's never going to be a waste. They are going to be so good at influencing you for the better, and you can reach your goals much faster.
Hmm.
That would be
Yeah, I think
yeah.
that's great advice. That's great advice, and probably you should also buy like some posters like this, and put it in your bedroom.
Yes.
um, it's actually fun because every time I woke up, I just stare at Warren Buffett, and it's crazy because my bed is just right here, so I can. Yeah, it's. I feel like I'm being positively influenced while I sleep.
Absolutely.
um,
Yeah.
but yeah, it was a lot of fun. Thank you again for agreeing to chat with me. And just to finish, where can people find you and kind of find your work? Where do you want to redirect people if they are interested to know more about you?
You can look for me in LinkedIn, right? Under Jeffrey Ong, JeffreyOng, and then you'll be Azimuth Investment Management.
Mhm.
You will find me there. Then you can see my some of my posts, and then if there's any YouTube that I occasionally launch, then I'll put it there. So you can find
Nice.
me there. Yes.
Cool, cool. I would be happy to assist you if that ever happens.
Thank you.
um, nice. So yeah, thank you so much, and I hope you had fun just like me.
Thanks, David. It's been a pleasure again. Always a pleasure to talk to you. Let's keep this going.